Should you buy dividend stocks? I've always believed that the simplest investing ideas often last the longest. Dividend investing is one of those ideas. It isn't exciting, and it probably won't make you wealthy overnight. However, for many investors, it can provide reliable income while helping build wealth over many years. I am Tripp, 75, and I make simple, unedited, personal finance videos. I am totally unbiased and have no classes, workshops, or promos to sell you stuff. This video is for entertainment only and is not personal, financial, or legal advice. These are my opinions. Dividend stocks represent ownership in companies that share a portion of their profits with shareholders through cash payments known as dividends. Many companies distribute dividends every 3 months, while some have rewarded investors consistently for decades and even increased those payments year after year. One of the biggest attractions is the opportunity to receive income without selling your shares. Some investors spend their dividend income to help cover everyday living expenses, while others automatically reinvest those payments to purchase additional shares. Either approach can make sense depending on your personal financial goals. Many retirees appreciate dividend investing because regular payments can provide peace of mind. Knowing that income arrives on a consistent schedule can make budgeting easier and reduce financial stress during retirement. Dividend-paying companies are often well-established businesses with recognizable products, experienced management, and long operating histories. While no company is immune to economic challenges, larger, financially healthy businesses often weather difficult markets better than younger companies. Although dividend stocks can certainly decline when the overall market falls, they have historically been less volatile than many high-growth companies. Lower price swings can make it easier for investors to stay committed during uncertain markets instead of making emotional decisions. Dividend growth may also help offset inflation. As the cost of living rises, companies that regularly increase their dividend payments can help preserve purchasing power by providing growing income over time. Another important advantage is compounding. Reinvested dividends purchase additional shares, which may generate even more dividends in the future. Over many years, this process can significantly increase the value of an investment portfolio. Time and consistency often matter more than large initial investments. Dividend investing usually rewards patience rather than excitement. Investors chasing the newest trend often overlook the long-term benefits of steadily owning quality businesses. Of course, dividend investing has disadvantages. Many dividend-paying companies are mature businesses that focus on stability instead of rapid expansion. As a result, their stock prices may grow more slowly than younger companies reinvesting all of their profits back into their businesses. Investors seeking maximum capital appreciation may prefer growth stocks. Those companies often have greater upside potential, but they generally provide little or no dividend income and may experience larger price swings. Taxes should also be considered. Dividends received in taxable brokerage accounts are generally taxable during the year they are paid, even if they are immediately reinvested. Understanding how dividends affect your personal tax situation is important. Another risk is that dividends are never guaranteed. Companies facing declining earnings, excessive debt, or economic hardship may reduce or eliminate their dividend payments. Be cautious of unusually high dividend yields. Sometimes a very high yield is simply the result of a sharply falling stock price. That may signal underlying financial problems rather than a great investment opportunity. These situations are often called dividend traps. The attractive yield may not last if the company's financial condition continues to weaken. A healthy business with sustainable earnings is usually far more valuable than an unusually large dividend that may soon disappear or be reduced. Before investing in any dividend stock, spend time researching the company. Review its earnings, debt, cash flow, dividend history, and how it generates profits. Understanding the business is just as important as understanding the dividend itself. Successful dividend investors focus on quality instead of simply chasing the highest yield. A dependable company paying a modest dividend is often a better long-term investment than one offering an unsustainably high payout. Diversification remains essential. Spreading investments across different industries and companies can reduce risk and help protect a portfolio from problems affecting any single business. Interest rates also influence dividend stocks. When rates rise, some investors move money into bonds or other income-producing investments, and this can temporarily pressure dividend stock prices. Dividend investing may be an excellent choice for investors seeking reliable income, greater stability, or long-term wealth through reinvestment. However, it isn't the perfect strategy for everyone. Your investment should always match your personal goals, time horizon, and tolerance for risk. Avoid rushing into any investment decision, taking the time to understand a company's business can prevent costly mistakes. If you cannot clearly explain how a company earns its money, you may want to continue researching before investing and educate yourself a little better. Reading annual reports and reviewing a company's dividend history requires effort, but that work can pay off over time. Younger investors should not overlook dividend stocks. Decades of reinvesting dividends can produce remarkable long-term results. Even modest investments made consistently can grow substantially over a lifetime. Investing is ultimately about choosing strategies that fit your own circumstances. Some investors need income today, while others prioritize future growth. Dividend stocks can play an important role, but they represent only one piece of a diversified investment plan. Like every investment, dividend stocks have both advantages and disadvantages. Understanding both sides can help you make more informed decisions. Long-term investing succeeds through discipline, patience, and owning businesses you understand. Dividend stocks are not perfect, but they have helped countless investors to generate income and build wealth over many decades. Thank you for watching. Have a wonderful day and a very blessed week.